Good afternoon and welcome everyone to the 661st meeting of the Economic Club of New York. I'm Barbara Van Allen, President and CEO of the club, and it's an honor to be here with all of you. This year is very special. It's our 115th anniversary of the club, so we're really proud of our history. The club has served as the preeminent nonpartisan forum for discussions on social, economic, and political issues for decades, generations actually, and we're very proud of that history. We'd also like to thank our DEI corporate partners who've worked with us now for several years since the killing of George Floyd to help bring forward programming that encourages diversity, equity, and inclusion across all sectors of our economy. So thank you to BlackRock, Bloomberg, MasterCard, S&P Global, PayPal, and Taconic Capital. And some of those partners have representatives in the room today. Thank you for joining. A special welcome to the members of the ECNY 2020 class of fellows, 2022. A select group of diverse rising next-gen thought leaders, as well as students from the CUNY Graduate Center and the Columbia Business School joining us virtually. We do, by the way, have a fairly large virtual audience in addition to those in the room. Today, I'm honored to welcome our special guest and ECNY trustee, John Rogers, chair and co-CEO of Ariel Investment. You might remember that about a year ago, I guess, or a year and a half ago, we were lucky enough to have his other co-CEO, Melody Hobson, join us. So this is just wonderful to be able to bring both of them to the Economic Club of New York. John's interest in equities was kicked off actually at Princeton University, where he majored in economics. And over the 2+ years, he worked as a stockbroker for William Blair and Company. In 1983, he founded Ariel to focus on patient value investing with small and medium-sized companies. While their research capabilities have expanded across the globe, patience is still the disciplined approach that drives the firm today. Early in his career, John's investment acumen brought him to the forefront of media investment attention and culminated in him being selected as co-mutual fund manager of the year by Sylvia Porter's Personal Finance magazine, as well as an all-star mutual fund manager by USA Today. Furthermore, he has been highlighted along legendary investors such as Warren Buffett, Sir John Templeton, and Ben Graham in the distinguished book, The World's 99 Greatest Investors. His professional accomplishments extend to the boardroom, where he's a member of the board of directors of McDonald's, Nike, the New York Times Company, and Ryan Specialty Group Holdings. John also serves as vice chair of the Board of Trustees of the University of Chicago. Additionally, he's a member of the American Academy of Arts and Sciences and a director of the Robert F. Kennedy Center for Justice and Human Rights. In 2008, he was awarded Princeton University's highest honor, the Woodrow Wilson Award, presented each year to the alumnus or alumni whose career embodies a commitment to national service. Following the election of Barack Obama, John served as the co-chair of the Presidential Inauguration Committee in 2009, and more recently he's joined the Barack Obama Foundation Board of Directors. So back to today, the format will be a conversation. We're very fortunate to have club member Vonnie Quinn as our moderator. She is an anchor for Bloomberg's First World and host of Bloomberg Opinion. As a reminder, this conversation is on the record, and as we do have media in the room and online, please remember that. And now, without further ado, Vonnie, the mic is yours.
Barbara, thank you so much. I'd also like to thank the Economic Club of New York for at least keeping us partly sane during the pandemic with some of your many great events. And I know there's some upcoming events that we're all going to want to tune in for as well. But today is a very exciting day with John here. Let's get straight into it. It's been a tough time, John, with almost $18 billion in assets under management. How are you looking at this market sell-off?
We're looking at it as a time for opportunity. Warren Buffett always talks about the volatility should be your friend. And when you have this kind of dramatic shifts in the market and so many companies have changed so dramatically, we think there's an opportunity to take advantage of some real unique bargains in this environment. So we've been adding to our positions each and every week, finding more and more areas where, again, we're excited about putting money to work.
Is this a major pivot point, or is this just a resetting, a repricing?
I think it's in some ways I guess it's a repricing. I think if you start with that with the higher interest rates that we've all experienced, we've all seen, and it's caused by the higher inflation in this country, high P multiples have had a multiple compression because, you don't want to pay, with interest rates going higher, you don't want to pay a lot for future earnings that are going to be delivered 10, 15, 20 years down the road. So it's to see this PE compression, I think it is a repricing. And the stocks have gone too far. I think they were too expensive, and people just hadn't factored in the higher interest rates and how much it could impact how you value these businesses.
So we've had an array of events, some black swan events, in fact, contribute to this, as well as you say, massive inflation and huge uncertainty. We're looking at a bear market for the S&P 500, and obviously interest rates have been quite volatile. I'm going to get to the Fed in a moment, but do we see more of a sell-off? Is this market stable?
I think we're getting, you never know. We all know this is impossible to predict the markets. And, we're long-term investors with a turtle, as a logo to remind us that patience wins. And we always want to, think out over the horizons. But I do feel like the amount of pessimism and gloom in the market is so high. Everywhere we go, people are talking about how afraid they are. I had a meeting yesterday in my office with a person who said his brother-in-law just sold all his stocks because he was so fearful. And you look at the investor newsletter data from Investors Intelligence, it shows a lot of bearishness everywhere. So when there's so much pessimism, so much bearishness, I do believe, you mentioned John Templeton earlier, he always said you want to buy when there's maximum pessimism. I think we're getting into that type of environment. And Warren Buffett always says you want to be greedy when others are fearful. And I think there's a lot of fear there. So that gives me optimism that we're starting to bottom here.
Let's talk a little bit about the economy and what the Federal Reserve is trying to do in order to engineer a softish landing. 50 basis points and another 50 and another 50. Do we get to neutral by the end of the year, and roughly where is that?
I don't think I have a crystal ball to tell you exactly what the Fed's going to do, but I think that one of the things I've learned over the 39 years that I've been at Ariel is what gets you is always the surprises, the things you didn't think about, the things you couldn't have worried about. When the COVID hit, none of us had anticipated that. I don't think very many people saw the war in Ukraine coming. So I think when you have all the Federal Reserve and all the top economists in the world and everybody fixated on whether we can avoid this recession, whether the Fed can do the right thing, I don't think they're going to be too far off. I don't think there'll be some big negative surprise that'll come from this. It's so well identified, it's so well talked about. It's on the front pages, it's on the news all the time. So I don't think we'll get hurt by it.
So that's a lot of optimism in that paragraph. We have heard in the last couple of days alone from various investors suggesting that it's a very narrow path to avoid a recession. What is the likelihood that we can avoid that recession?
Well, someday we'll have another recession. We don't know. Everyone's always predicting many more recessions than ever occur. That's sort of one of those cliches that we all talk about and hear about. So I don't see a recession coming anytime soon. As we talk to our management teams, we've just gone through the earnings season. We've been on the phone with CEOs and CFOs of dozens of companies in the last several weeks. Everyone is telling us they're seeing no signs of a recession. The consumer has a lot of money. The consumer's been saving. We know the low unemployment rate. So we don't think it can be a consumer-led recession. So I think it'll be a ways off. And I wouldn't worry, but if it comes a little bit early, that means it'll just end a little bit earlier. People always think it's like this great, boogeyman out there. We're gonna have this great recession. But eventually, we all know once you have the recession, you have a recovery. And when you go to the annual meeting for Berkshire Hathaway, my favorite thing is he always talked about what the Dow did last century, how it started at 66 and ended at over 11,000. I know you guys have all heard that all the time, but I keep reminding myself that last century we had Great Depression, we had many recessions, we had World War I, World War II, We had a pandemic. We get through these. He always says our capitalist democracy is the best system ever invented. And so I try not to get too troubled by this short-term worry of something that can come in and hit us.
So we do get through them, but it's the question of the damage that's done, I guess, in the getting through them. When you talk to all of these CEOs, CFOs, supply chain managers and so on, and I know you speak to them on a quarterly basis at least, what are their main worries right now? Just personally speaking, I spoke to a CEO at the weekend who's not particularly interested in the supply chain in the next 6 months because they know they have their contracts locked in, but they're extraordinarily worried about a year out and 18 months out.
I think the supply chain issue is a worry for a lot of the companies we talk to. It's a headwind. It's just, it's a problem, but they're working through it and for the most part getting through it, and with some challenges, some higher expenses than they would have hoped. But it's not a catastrophe by any means. And at the same time, I think people are worried about inflation. These managements, as we know, most CEOs have never lived through an inflationary period before. They don't know what to expect. They don't know how this can impact them. But so far, so good. People are feeling they're able to raise prices, and so we're spending a lot of time trying to check on that, double check on that, ask all these management teams how they're dealing with it. But so far, they're managing it.
So inflation still at an 8% handle. We're not sure exactly how fast it's going to come down or what kind of outside factors are going to help it come down, because right now things are not alleviating all that much when it comes to energy prices and when it comes to frictions in the system. Where do you see the Fed being able to bring inflation down to by the end of the year?
I'm not sure by the end of the year it'll be down very much. I still think that they got started too late, and they kept saying this was transitory, kept saying it was transitory, and they didn't quite get it right. I think so. Ultimately, it's going to take longer for it to get under control. So whether we get there by the end of the year, maybe it's middle of next year, but eventually they'll tame this beast and things will be back on track.
So if you could put a figure on it, or if you could cite what some of your CEOs are telling you, are they seeing 6% still at the end of the year, 4 to 5?
I think it'll be higher, significantly higher than that. That's our view. We have our vice chairman, Charlie Bobrinsko, many of you know, he's been with us about 20 years, and he was at Salomon Brothers for 20 years, and he is often out prognosticating about this, and he's been one to say that the rates are going to be substantially higher than people anticipated. We're very close to a professor, Robert Aliber, who's a retired economist from the University of Chicago, who has been forecasting this for quite a long time. He's been quite afraid of the inflation and higher rates, and he continues to be. And so I would take the over on how inflation will be at the end of the year.
That's a little bit terrifying. So if that's the case, then won't the Fed be forced into making either larger changes or at least putting 75 basis points back on the table? It got taken off the table.
Yeah, or it'll take longer. Again, if you just take the long-term perspective, whether it ends up somehow they go a little bit further, I think we get, getting caught up in the shorter term. I'm really trying to think out over the horizon. What's this? Whenever we're buying companies, we're always looking out at that 3 to 5 year horizon at the minimum, and trying to see what's it going to look like once things get normalized. And we've done that, whether it's the crash of '87 or whether it was 08 and 09 financial crisis, whether it was COVID. Everyone sort of always thinks about that next couple months or the here and now, and that recency effect that people talk about from behavioral finance. We try to protect ourselves against that. Not easy to do, but I keep saying what it's going to look like when the sun comes out and these the clouds drift away. What's it going to look like? And when you think that way, you don't get too swept up in the short term.
Well, that brings up the question about the labour market. And obviously, you're invested in very labour-intensive industries. What are your CEOs telling you about how tight labour supply is, and what happens if inflation does stay up there at that elevated level, like you say?
What we know is we all see the help wanted signs in front of stores. We hear about the people leaving their jobs and waiting for the perfect job when they're getting compensated at a much higher rate. So I think this is going to be a sweet spot for the labor market right now. And as we've seen, there's a big push in unionization. We've seen what's happened with Starbucks, what's happened with Amazon, people are feeling more empowered to push for wage increases. And I think that's going to be the reality of this environment. We have inflation higher than expected. You're going to have wages that will be higher than expected. But as we said earlier, the consumers have been doing a good job of saving and keeping their balance sheet strong, and so they're going to be able to spend. And I think that'll is the wind beneath this economy that's going to keep it growing and keeping it solid and strong.
You mentioned Starbucks, and obviously there's involvement there. You manage some of the pension assets and so on. And
well, no, not in Starbucks. That would be a conflict because, as you know, Melody Hobson is the chairman of the board. So,
but I guess my point is, between McDonald's and Starbucks and some of these chain restaurants and so on, there will be more of a push to unionization. What are your thoughts on whether that's a good thing for the US?
It's the idea for we support organized labor. We have always have and are very close to. I used to be a vendor. I was a vendor at Wrigley Field for Sox Park and White Sox Park for 6 years. I was a member of the Service Employees International Union. Melody's a union member from her work on television. So we've always been supportive of organized labor, and there's always going to be that healthy tension between management and the board. But I believe that ultimately you'll get to the right conclusions. I also tell people I went to the University of Chicago High School, which the University of Chicago many people know has a pre-K through high school, all unionized teachers, which people are surprised that a private school would have that. And when I got a chance to be chairman of the board, the first thing I did was I got a former teacher on the board to send a signal to the union that we wanted to work together between our board and the university and the faculty, and how important that was. So I think you always want to build a bridge and not have the kind of hostile tension that sometimes can occur in this country, and especially in this environment that we're living in today.
McDonald's, we have a new proposal from Carl Icahn, a 65-page proposal, and obviously you're a board member, and I'm just interested to hear what you think about this new proposal and what happens to the two directors that he's trying to replace.
I probably shouldn't say too much about
Please, we're all friends here.
We have two terrific directors that we're highly confident are going to be reelected. They make a major contribution, and they're so smart and thoughtful, and I think the institutional world understands that.
I do say that because we did also get some audience questions, and there was a few McDonald's questions in there, and one of them was actually, would you like to become chairman of the board of McDonald's? I presume you wouldn't say no.
I can't answer that question either, but I was talking earlier to Barbara. From the time I got home from college, I've gone to McDonald's almost every day before the COVID, and every morning I would get a biscuit and start my morning there, reading the papers, relaxing, and then...
He also used to play many hours of basketball every week, so it was okay.
I'd often sneak away in the afternoon, get quiet time to read and get some French fries, and so McDonald's is my favorite place, and it's been a real privilege to be on the board the last 18 years. I really truly love the brand, love the culture that Ray Kroc and Fred Turner and Andy McKenna and others have created there. It's a special place.
Does Icahn get his way, though?
I'm highly confident that we are going to have our directors elected, because...
Just for context, Carl Icahn's, I'm sure you all know this, but his problem is that animals are not maybe being treated quite as fairly as they should be, pregnant pigs and so on. It gets very detailed. We won't get into all of that, but
it is a culture that are there that, again, really started with Ray Kroc. And again, Fred Turner became the next CEO. We really do listen to all of our constituencies, all the things having to do with ESG, all the things having to do with the kind of items that Carl Icahn's talking about today. We take that very, very seriously. Sheila Penrose chairs the committee that oversees all of that. And at the annual meetings, we've always created a platform for people to be heard. And then between meetings, to sit down and talk with folks and learn from what can be done better and how we can improve if there is something, a clink in our armor somewhere.
Mm-hmm. Let's talk a little bit about valuations, because you have said in the past, and it's true of many value investors, that you look to companies that have a 40% discount to their intrinsic value. How have the changes in market valuations impacted how you're looking at companies these days? And is it more difficult to find those kinds of companies?
As I touched on earlier, it's easier right now. Our portfolio itself, our Ariel fund, our flagship fund, selling at about 11.5 times next year's earnings, roughly 30% discount in the portfolio. There are many stocks now selling at 40 to 50% discounts. So it's an excellent time to take advantage of this PE compression, to take advantage of this fear, and find bargains that are there.
Talk to us about some of those bargains. I want to ask you, I'm desperate to ask you about Manchester United and Madison Square Garden, but have you found new bargains?
We're working on this really, really hard because there's just a lot of things. It's just a question of almost like it's like, which is the better bargain? What's the better value? But our largest position is Madison Square Garden Entertainment. We were talking about it in the green room earlier. Many of you heard me. I've been on message for a long time on this one and haven't been right yet. But they own the actual garden and all the land underneath it and surrounding it and the air rights above it. And they own Tao, the restaurant chain, and Hakkasan, the nightclub chain. They own the Chicago Theater in Chicago. It's just a really great, great business. It's a wonderful business. Who wouldn't want to own the garden? They have huge pricing power. There's really no substitute for the best bands in the world want to come and play there. Of course, the Knicks and the Rangers, et cetera. And then they're building a $1.9 billion sphere in Las Vegas. It's an extraordinary place. I had a chance to go and have a hard hat tour. And it's going to be the best arena in the world. And once they build it in Las Vegas, they hope to be able to build it, sort of franchise it around the country. But it's this giant sphere with extraordinary electronics inside. We're going to be able to smell and have the best visuals, the best sound system. All the best artists are going to want to go there for extended stays and residencies. And they're going to be creating their own content for the facility. And they're going to be doing exciting things. They just signed up last week and announced they have a program with F1. So they're going to be actually have the race will go around the sphere and all the electronics will make it magical and hopefully the whole world will be watching, So that is one of my favorite stocks and one of the cheapest stocks.
It is down 16% year over year, but I mean, if you look across the board, everything is down. So what will be the catalyst that,
I think the catalyst really, this one's pretty clear. Well, there's two. They own the regional sports net, and the regional sports network is going to be more and more going direct to consumer. So you're going to start to see if that really actually works the way they anticipate. You'll be able to, watch your Knicks and Rangers on your phone everywhere, all over the world and the like. And then the other thing we'll be looking for are the announcements about the residencies. Is it going to open next fall on time? Are they going to keep it within budget, roughly that $1.9 billion? The expenses will keep those under control along with all the content expenses that they're expensing right now. And then what kind of artists are signing up? Are they going to be able to get the best artists in the world to come, get the best conventions in the world to sign up during the day? So the catalyst is going to be the opening, as you get closer to the opening of the Sphere next year. The naming rights of the Sphere, Madison Square Garden, they don't believe in having naming rights there, but they've agreed they're going to have a great naming, and we think that'll be something that'll add a lot of value. So those announcements will start to really come out as we get closer and closer to the opening next fall. And if you go to Madison Square Garden headquarters here in New York, Jim Dolan actually has a visual he can watch on a big screen, the moment by moment building of the Sphere. You can actually see it there, all the workers and keeping track of exactly how well it's going. So.
It sounds like you believe then that perhaps we might be through the worst of COVID, this particular pandemic. What happens if we get another wave in the fall or something different?
Well, it would be problematic in the short run. But I do think that we're learning to live with it now. And I think we realize, I'm not a doctor and I don't want to compete with Dr. Fauci and, but I do think that just going around New York this last couple of days, going around Chicago where I live full time and part time here, people are just out and comfortable and confident and realizing if they get it, they're going to be down for 4 days and they're going to test and they'll be back to normal, and people are really, very few people are dying, as we know. So I think that unless it's some kind of dramatic shift, or something new comes out, and anything can always happen. But I'm highly confident. But I would have said the same thing a year ago.
Well, of course, we can't, as you said earlier, we can't see these events coming. That's why they're black swan events, right?
Yeah.
Manchester United is an interesting one. Football, soccer, the team is not, I don't know if anyone follows Man U's performance this year, but it hasn't been doing great. It's not, I don't know how much you get involved in decisions about managers or even follow them. I mean, next week is going to be a very exciting week for soccer fans, but what attracted you to that particular club and that particular stock?
Well, they have a huge worldwide brand, and like a lot of the publicly traded sports-related companies, they've sold off in this COVID environment. But we think that the value there in professional sports is going to be higher than ever. We think that, as I touched on earlier, the direct-to-consumer, the ability to watch content all over the world on your phone, on your iPad, whatever it happens to be, I think is extremely valuable. What's happening with gaming is just extraordinarily making this content worth so much more that people are going to want to watch games from beginning to end because they can, bet on that field goal or this free throw or this goal or whatever it's going to be, moment by moment. I think the gaming world it's really transformative, especially here in America, and we see it here in New York now. We're seeing it in Illinois. Almost all the states eventually will have that. So I think the gaming is a game changer. All the things around the NILs, the value of the ticket you have. You buy a ticket to a world championship. It's something that could be worth something a lot. All the content, all the different things that are part of professional sports. It's live content. As we all know, what's happened with TiVo and all the rest of the ways that people can consume content, but people still love live sports. Mm-hmm. And as you see, as people are coming back from this pandemic, the energy in the stadiums is just extraordinary. So I think this is a great time to be able to take advantage of this. And as you start to see more transactions happen, what's happening with the oligarch having to sell his soccer team,
Chelsea, and it looks like it's the Bully consortium that's going to win out in the end.
Yeah, you look at the Denver Nuggets the Denver Broncos are for sale. All the dollars are much, much higher than even the Forbes annual ranking shows. So the prices just keep going higher and higher, and again, the fundamentals are getting stronger and stronger for the businesses.
Some of the other, you've invested in toy stores since you were a kid, right? Since your dad started helping you buy stocks when you were 12 years old. But some of these other ones are also extraordinarily interesting. So Mattel, that's one of the ones that's done extraordinarily well for you. It's up 26% in the last year. So he still wasn't wrong 40 years later. But Paramount Global, is that also a play on live events and then being broadcast, or is that something different?
Many of you know Paramount Global it used to be CBS, then it became Viacom CBS. It's had sort of several names over the time, but it's we think a really, really, really cheap stock. Sumner Redstone always talked about content is king, and they have an enormous amount of content. You think about Paramount Studios is extremely valuable. They've got the new Tom Cruise movie coming out. They have the Mission Impossible franchise for next year. The Godfather is a big part of their franchise. And I think it was MGM was just sold. Don't hold me to think MGM was sold for $12 billion recently. We think Paramount itself is worth much, much more, just the studio. And then, of course, you've got CBS with all of their sports content, NCAA basketball, NFL football, 60 Minutes, CBS Sunday Morning, all the television, primetime shows on CBS, also benefiting for all the money being spent on elections for their owned and operated local stations. Extremely valuable. And, of course, you've got Viacom, you've got Nickelodeon, you have Showtime, all these worldwide brands that are all under one umbrella. They're becoming more, Bob Backus is making more of a global company. Mm-hmm. It's just really extraordinary what they're doing. They're beating all expectations on the streaming part of their business with Paramount Plus. They're spending more money than they anticipated, and they're anticipating not getting profitable for a couple of years, which has sort of slowed down the stock price. But I think people are so fixated on the streaming, they're not realizing the strength of all the core businesses, including Simon & Schuster and the real estate that they have and the cash that they have. But I think ultimately they're well positioned in the streaming wars because they can bring together the sports, the news, and that content over all the different things, again, from Nickelodeon to Paramount. I just think it's a really well-balanced portfolio. And if somehow it doesn't work, they'll if it gets consolidated down to 4 or 5 main streaming companies, they will, if they don't get to be one of the 4 or 5, they'll get bought by one of the others and get consolidated in. And we understand that the board understands they want to do what's right for shareholders in the long run. So it's one we're quite excited about. Another company selling at 50% discount, really low price earnings multiple, and interesting and fun to research.
I want to move to something slightly different now. Some of the areas of the market that have gone haywire over the last year or two, and obviously we should probably start with crypto, right? So, yet another episode, let's say, in crypto recently with Terra USD, but we've had several of them over years, going back to Mt. Gox and so on. What are your thoughts on crypto and whether we should even be talking about it still? I mean, on the one hand, you have Alan Howard now with the crypto platform, which makes you do a double take, and on the other hand, all of these years later, all of those resources poured into mining, cleaning up mining, creating currencies, social media chatter from Elon Musk and other people. Does it all amount to anything? Are we getting anywhere with these new currencies?
Well, I think, I mentioned Warren Buffett several times today, and I was in Omaha. I go every year for the annual meeting, and, he made it very clear again this year. He doesn't think crypto is worth very much, and I'm not going to argue with the world's greatest investor of all time and his partner, Charlie Munger. It doesn't seem to produce anything. It's like gold. It's not, really a useful asset. It's not like a farm that's producing corn or what have you. It's just a commodity. It's going to be priced based on what someone's willing to pay for it, not what kind of, what does it actually produce. So I do think that it's one of those classic bubbles. And everyone, it kind of reminds me of the internet bubble. Everywhere you go, like the guy that delivers my Gino's Pizza in Chicago, he wanted to know, should I be buying crypto? Whenever you get, and then political leaders, they're all excited about it, and some sports figures are all excited about it. It was the same thing with the internet bubble. When it's the average person who's just going in the markets, when the political leaders and sports leaders all jump on the bandwagon, it's signs that it's getting toppy, and that there's a dramatic downside from there. You want to be early in this business. If you're going to make money in those, you got to be early, not get in after it's already gone up many, many, many fold, and everyone's excited and telling you how much money they've made. I think it's a time to stay away.
And it's not just cryptocurrencies, right? It's there might be something to decentralized finance, but it's CBDCs even. I mean, there's a lot of central bank resources going into researching CBDCs and what happens in the future to money. But you do a survey every year, and you recently did one with Charles Schwab, in which you found that 38% of young Black Americans are embracing cryptocurrency to counter a distrust in stock markets and financial institutions. How do you read that? I mean, particularly when that compares with 29% of their white counterparts, and it's based on 2,000 people, half of which identify as Black. Is there something wrong with the trust in the financial system that can be repaired?
I think over time, there's more and more trust building in the financial markets. I think the work around financial literacy here in New York, the New York City Rise program to get young people investing in real stocks is a terrific program. You're seeing many other initiatives around this. I think that's going to happen over time. I think organizations like Charles Schwab that have done such a good job of sort of democratizing the markets and allowing you to buy small shares and small amounts, and not having to go into an office, but being able to do it online and not having to be uncomfortable.
Right, but Robinhood did that as well and got huge uptake, and look what happened there.
No, I think the more experienced firms like the Schwab's world are going to be much more sober around that, and not fall into people getting excited and chasing the hottest thing the way Robinhood did. And I think that kind of gambling is not good for the markets. And it's unfortunate because it's bringing in, often it's the first time people who come in and get swept up in this. And they think they can get rich quick. And it happened with the internet bubble. It's happened in prior histories of bubbles. But eventually I think this will settle, this will pass, and things will get better. And there's a lot of things that are going on now, I think, around financial literacy that I think were not there a generation ago. Cory Booker has an initiative around baby bonds in Washington, which I hope could also be baby and stock baby bonds and stocks, stocks and bonds, because you want to have young people comfortable in both sides of the
Baby
market.
portfolio.
Yeah. So, but I think there's some other political leaders doing some neat things around this that I think are going to make a difference. There's a guy, Ray Bashar at the Federal Reserve of St. Louis, is doing a lot of work, just came out with a new book talking about financial literacy. There's just some real momentum, I think.
Well, because you had a lot of experience before you even, became an adult. You've been doing this with your dad since you were literally 12 years old. So there was a lot of hard work that went into learning about the market before you ever even bought a stock.
I was very fortunate. Yeah, I had my dad was a Tuskegee Airman and flew over 100 missions in World War II. And he was 39 when I was born. So he had a lot of time to decide exactly what I was going to do at different ages. And certain age I had to have a checking account, certain age I had a savings account. I mentioned my being a vendor, I had to have a summer job by the time I was 16. And then by the time I was 12, I had to have a stock market portfolio. And
amazing,
great.
Right?
Yeah, it was a great idea. And the thing was my parents were divorced when I was 3, so I'd go visit my dad on the weekends and he'd have his newsletters piled up for me to read, and the annual reports and the quarterly reports of the companies that he had invested in for me. He wasn't wealthy. It was $250 here and $500 there. But as the years went on, and then he took me to meet his stockbroker, a guy named Stacy Adams, who was the first African-American stockbroker on LaSalle Street. And he became my role model. He became my mentor. I'd just go and sit with Stacy and watch the ticker tape go by. And he was this unique guy. He'd been there forever. And I know Priscilla knows she was a stockbroker in Chicago for a long time and knows how rare it was. But to have him there for me made all the difference. But my father introduced me to him, and it just became a labor of love. It became fun.
Well, and it's phenomenal that you had that. So many people don't. Most people don't. You were probably the exception that you had a dad that was that interested and that, aware of how young he should start teaching you, and that you had other mentors like that. I mean, if you went out there today, would there be any more mentors, or is the ratio still that tiny? It feels to me like, I've been in this business, 15, 20 years, that not that much has changed in that time. So what about 40 years? Has much changed in 40 years?
It's changed. It's and it's accelerating the change since the George Floyd murder. There's a much more, I think, rigorous and serious efforts to diversify the financial services industry. Melody Hobson, and my co-CEO, we're both getting more opportunities to speak to groups like this, speak to boards of directors, speak to different types of organizations and political leaders. There really is a push, and I'm starting to see some real traction and some things happening. I think I have to say here in New York City, I have to say you guys have been way ahead of any other city in the country, by far. With the kind of leadership we've had from the Ken Chenaults of the world and others in leadership roles, but also the Ray McGuires and the Bill Lewises that have been in investment banking. We've had a lot of progress in private equity. So New York City is one that I think is just really, truly making a difference, but unfortunately, it hasn't been extrapolated throughout the United States in the way that it should.
Well, there's one statistic that I just found absolutely terrifying from one of your surveys, and that it's that 1.2% of all assets under management are at minority-owned firms. Is that still the case? 1.2%?
Yeah, and that's for all minority firms, I think the data shows.
Correct.
So it's not just African American or Latinx. No, the numbers are really bad when it comes to money management and mutual funds. What makes that particularly heartbreaking is you all know here in New York, so much of the wealth and jobs and philanthropy comes through Wall Street. That's a part of the economy where, again, it's been so successful. You have the high profit margins. And in the past, so many progressive institutions, even when they wanted to do the right thing, they did it through this term supplier diversity, which implies that, okay, if you're gonna work with minority-owned business, it's gonna come through supply chain. Construction, catering, janitorial services, office supplies. The lowest margin part of the spend, and where the least amount of wealth has been created. And we have hard data that shows that, from McKinsey and BCG, showing the Chicagoland spend, business and professional services is $75 billion with profit margins 5 to 20%. Construction is 10th on the list at roughly $25 billion, profit margins less than 1%. So if you really want to make a difference, you have to get rid of this term supplier diversity. The University of Chicago coined the term business diversity. And now our civic committee is using that terminology in Chicago, our 84 largest businesses. The Barack Obama Foundation is using the terminology business diversity. So I think to make a difference, we have to signal to people that you want to be able to do business with minorities in everything that we do. That it's kind of unconscious or implicit bias if you only work with minority firms in the commodity parts of spend and not in the most lucrative parts of our economy. So that's the reality. And the other part I would say, last thing I'd say that's disappointing, is I bet if you looked at that 1.2%, most of that spend is coming from government. And unfortunately, the universities, the hospitals, the museums, many of the anchor institutions and the foundations have been the least progressive, which you would have expected the exact opposite, but they have been the least progressive.
What changes that? Is it just complacency? Is it, oh, well, this is the way we've been doing it for the last 20, 30, 40 years, therefore let's just, sign on the dotted line again? What gets the fire lit?
I think you're right. I think it's partly the fact that people have done it the same way for 50 years, just supplier diversity, construction being the focus, and everyone just thinks that's the way to do it without actually thinking about it. People have this definition of small business that hasn't been really thought through in an economy where you have these giant companies that are $1 trillion market caps. So the prism with which people look at these things, they just look at them the same way and haven't evolved as our economy's evolved into this, again, professional services, capital light industries, less manufacturing. So that, so you're right, people haven't adjusted, people haven't changed in the way that the world is. The second thing is, because there's so few of us in the financial services industry, I was lucky to learn about the markets you said earlier, but then be on boards like Aon Corporation in Chicago for 18 years and watch Pat Ryan build that into extraordinary enterprise and see how a successful financial and professional services business can grow and thrive and create all kinds of jobs and philanthropy and political empowerment and all aspects. Pat's a genius. But because there's so few of us in those spots, when we sit on a board of a hospital or a museum or university, when they put someone who's diverse on those boards, it's often people who are not coming with a lot of financial services experience. And so they're there to think about maybe social justice issues, but not as comfortable raising their hand and pushing for economic justice. And something Dr. King used to talk about that all the time, that many progressive white Americans deplore prejudice. Deplore prejudice, but accept or ignore economic injustice. And so you have to have progressive leaders and people of color in the boardroom willing to fight that sort of standard way of looking at the world.
Well, you're working overtime to try and correct some of the biases. You have a Black Directors Conference every year, and you're about to have your 20th, which is amazing. Several hundred Fortune 500 directors come, and it's, I guess, off-the-record meeting and sort of casual in some ways, where you just get to chat amongst yourselves and figure out how to change things. What's emanated from that, and what do you hope to tell corporate America about, who's available out there?
Wow, there's a lot there on that one. It's hard to give a crisp answer. I'll do my best. So we started the conference with Charles Tribbett from Russell Reynolds 20 years ago, and we had 30 directors at the Gleacher Center in downtown Chicago, the University of Chicago's Business School. And you're right, the last year before COVID, we had 200 directors. And we've been really blessed. We've evolved it to being just not African American directors, but more and more Latinx directors also. It's been great that both the Asian community and the Latinx community have created conferences patterned after our conference. And so we feel like we're really impacting and touching a lot of people. And we've been sort of really blessed that over the years we've had a diverse group of leaders come and speak at our conference. It's the Ursula Burns and the Ken Chenaults have been there, the Don Thompsons from McDonald's, but also the Jamie Dimons and Jeff Emmelts of the world. Shonda Rhimes has been there, just extraordinary. We've had Magic Johnson there. We even had President Obama there.
Michael Jordan didn't come though, because he's probably still angry about what happened. We'll get to that in a minute.
We have had Doc Rivers.
Okay.
And so we've gotten a really terrific, great group of leaders have come. And one of the things that we have talked about from the very beginning, on Friday night, we have what we call the conscience of the conference. And it's someone, often in the early years, it was people who actually were close to Dr. King, who had marched with Dr. King, So we had Andy Young, we had his best friend Harry Belafonte, we had Reverend Jackson, just these extraordinary people who have been real trailblazers, who have been real courageous. We had the late Congressman John Lewis, who came. And that Friday night is the conscience of the conference. So they're there to remind all of us that are fortunate enough to be in the boardroom that we have a responsibility to fight for economic justice and social justice in the boardroom, even when it's not comfortable. And they remind us why that's important. And then we hopefully learn from each other at the conference every year how to be effective in the boardroom, how to get to leadership roles where you can leave an impact, leave a legacy that you've been there, that you've brought change, you've brought difference, you've opened up doors. And so we've asked all of directors to agree to 3 Ps. One is to measure the philanthropic dollars of the corporate boards that you're on, making sure the money is being spread around, not just to museums and hospitals and the local university, but also to the historically black colleges and civil rights organizations that deserve support. That part, I think corporate America is doing better and better. The second P is not only measuring people throughout the organization, but making sure you're measuring the diversity of the people in the C-suite and on the management committees of the organizations that you're on the board of. Because everyone always tells you about the pipeline. We think it's important to have leadership there that can actually bring in more talent and make a difference. And then finally, we ask everyone to measure the purchasing and to keep track of how the money is being spent by category. And as we talked about earlier, and then changing the terminology from supplier diversity to business diversity. So if we can get all those things done, we really think we can transform opportunities to close this wealth gap in this country. If all of the leaders are doing that in the corporate world, if you think about it, all these leaders that are on corporate boards are also on their local nonprofit boards, often have very strong political leadership roles. We can really make a difference. We can really make a change.
Well, it's a lot of weight to carry, and it's quite amazing that in this century you have to do that. But I guess it's only by incremental change that things change. Are corporations, willing to change quickly? I mean, are they receptive to these ideas?
I'm finding on this issue of the purchasing part that I've talked about a couple times already tonight, people are more open, and especially again since the George Floyd tragedy. I said earlier, our civic committee is really completely behind it. We had actually a big event in Chicago last week where the National Supplier Development Council had a big celebration in Chicago, had entrepreneurs from all over the country there, and our civic committee co-hosted a reception. We had several hundred people at the Chicago Club. And our civic committee gets behind the key things. It's people you guys would know here. It's Lester Crown, it's Jim Crown from the Crown family, you have the Pritzker family involved, you have the heads of the biggest companies from ITW to JP Morgan Chase, what have you, that are there involved with the civic committee. And they've all agreed that this is going to be the next big initiative, is to try to create opportunities to build strong minority businesses in Chicago. And when they get there, when they get committed to something, they can really make a difference. So I'm really optimistic, in my hometown that this is moving away.
Because it's been 2 years since the Black Lives Matter protests, and it's quite phenomenal that it's been that long. And then you have the events of this weekend as well in Buffalo, and it's just it just takes your breath away. And then other things come along, like Russia's war in Ukraine and inflation and oil prices, and people get distracted. So I guess you need people like you out there constantly reminding people to change their ways. I mentioned Michael Jordan and how he might not be too pleased, because I'm sure most people know this story, but why don't you tell it?
Oh, well, thank you. It's hardly a day goes by.
I mean, I would be telling that story every 10 minutes.
I know, Josh, it's, well, thank you. I used to go to his fantasy camp. It was called the Senior Flight School for people 35 years and older, so you could relive your childhood. And I played basketball at Princeton for a legendary coach, Pete Carrill, and I loved to play, and so the chance to sort of get
Captain Princeton.
Thanks. So to come back to the camp and be able to have world-class, Coach Krzyzewski was my coach one year, Jack Ramsey, who used to coach the Portland Trail Blazers. I think he had all the best coaches in the world. They had the NBA referees there. It was so much fun. And so I went for 4 years, and the last year I was at the camp, it was the 7th year of the camp, in my 4th year. Every year at the camp, Michael would ask any camper to play him in a game of, anyone who wanted to play him in a short game of one-on-one, he would entertain it and do it in front of the whole camp. So in the first 7 years of the camp, no one had ever beat him. And but what happened on this last year was that he'd played about 15 campers by the time he got to me.
He doesn't get mitigating circumstances.
Yeah, he was tired, and he was overconfident, and it was a short game, first to 3 baskets win. So we all know the shorter the game, the more luck is involved. So, but the cool part about it, when I make the last shot and I spin in the shot with my left hand, you can hear him, and the ball's in the air, he says, "Oh no." And
of course he does.
Because he was trying to block the last one. He would always let people get a basket or two, but he let me, but at the last one, he really tried hard to block it. He just missed blocking it. And then Damon Wayans, the comedian who was a camper, came on the court and started ragging on Michael, saying, take down those posters now, replace them with Rogers.
Yeah.
Get rid of all the Jordan posters. And Michael was not happy. Michael was not happy, but it ended up on YouTube. So if you just Google John Rogers or the 10 things Michael Jordan doesn't want you to see or something,
So I don't know why he doesn't have this literally emblazoned on every piece of clothing that he ever wears, because who else can say that in the world? And also, Michael, you lost. I'm sorry. It doesn't matter. It doesn't matter what happened that day.
It's just like one of those things that took on a little life of its own, because John Thompson had me on his radio show. It was the former Georgetown coach, a couple of Sports Illustrated stories.
Well, on that note, I did get an audience question, and we know that Tiger is a little semi-weakened. He's rebuilt his swing a few times, and he's been in a few little accidents here and there. But somebody in the audience wanted to know if you would ever take Tiger on at golf. But I don't think golf is a particular favorite pastime of yours, is it?
That's for sure. No,
yeah.
I don't golf at all.
So Tiger is safe. Tiger is safe. He's not going to get beaten by John Rogers Jr. John, you did, though, get very great at something, I'm sure, during the pandemic. Somebody like you doesn't sit still for very long. So tell us, what did you spend at least the early months doing before we all sort of tried to get back to at least normal?
I can't say I've gotten great at anything, that's for sure. But I ended up just coincidentally, a little bit, it was earlier. I started piano lessons about 4.5 years ago, totally from scratch. And I had never, read any music. I had never done anything with, meaningful with an instrument. And so I just started from scratch. And then with time, with all the extra COVID time, I really started being able to practice, an hour or 2 hours a day or sometimes more. I ended up getting a great teacher in the middle of COVID who's really been pushing me and pushing me and pushing me. And the thing that I found out, I've gotten in a little trouble for, but, I have my piano at my apartment, and you have the thing that holds up the music.
Music stand, yeah.
The music stand. And I realized I could put my music stand here with my music, and I put my iPad here. And so I could be on a board meeting, and I could be practicing piano at the same time. And
with the sound down, so you're muted.
Yeah, I have it muted, but every once in a while, you forget. And more than once in a while, and it's a little embarrassing when you're playing the piano and the board meeting's going on and people are trying to figure out what's going on. And John, I think you need to mute yourself. And
depends on what you're playing. What style did you start learning?
It's whatever's in the beginning books, and I'm doing Brahms' Lullaby right now.
This guy, seriously? I'm in awe of how fast you learn things and how you, but you have a process, I suppose, that you've been honing since you were literally 12, and you have people that you look up to, like Warren Buffett that you mentioned. Pete Carrill taught you a lot. You've had a lot of teachers over your time, and you now pass that on to people at Ariel. So there's a book that you recommend that everybody reads in the research team. Tell us about that.
Oh well, we have lots of favorite books to read, and we have a whole table of Ariel people here. I'm remiss in not introducing our team, both from our private Ariel Alternatives as well as Ariel Investments are all over here on the left side of the table. But my favorite book that I want everyone to read is Give and Take by Adam Grant. He's the Wharton School professor, and I don't know if he's been here to speak or not, but he is, it's a phenomenal book because it reflects what Coach Carrill taught us when I was playing at Princeton, that you think about your teammates first. And the way you succeed is always looking to help them succeed on the court all the time, and not thinking about yourself first. And then for there to be this great academic book that comes out and makes that point that the givers are the most successful in life, and the selfish people are the least, the takers are the least successful. It was just wonderful. So that's the book that I recommend everywhere to everyone. I just think it's...
Adam Grant, Give and Take.
Yeah.
Have a show of hands, has anyone read it here? All right, good. We've won. Well, we've got some reading to do, folks. Speaking of give and take, what would you like to see out of Washington, before the midterms or even, the next 2 years? We're in primary season. It's particularly nasty. And I'm just wondering what's the fragility that you would like to see undone?
Oh gosh, it's so hard. I mean, I wish that everyone would just tell the truth. I mean, that was the number one thing my father pounded into me as a young person. You always have to, tell the truth. Like he said, I can't trust you. That was like the worst thing in the world. When I was a kid, he just pounded it and pounded it and pounded it into me. And the idea that I think both sides now, to make their points, exaggerate the facts and are not truthful with the American, public, I just think it's just so wrong, and I think that's something that I continue to worry a lot about. You watch the news, and I'm someone like a lot of you, I'm a news junkie, I read all the papers, I watch all the shows, and you turn on, Fox or CNN or MSNBC, and you can't, am I in the same country? Because you can't even determine what the truth is because of the way that they skew the story so dramatically, and the people that come on all evening long. So that's my number one thing. I think we'll be a better and stronger country if we can all tell the truth to each other and trust each other to be factual and then make the decisions based on the facts, whether you're conservative or liberal or not, but just be honest about it.
And we should just give a mention to your mother as well, we've talked a lot about your father, but your mother was a huge influence on you and worked in Washington, D.C. She was, in fact, the Deputy Solicitor General. Yeah,
well, thanks for mentioning. I was mentioning earlier in the green room that we recently, last year or two, got a copy of a letter that Richard Nixon had written to a historian saying that if he had one more Supreme Court pick when he was President of the United States, that my mom was on the short list to be the first African-American woman on the Supreme Court, which is kind of cool now with what's happened in the Supreme Court this last year.
Absolutely.
So my mom was a lifelong Republican, like my grandfather, my great-grandfather, and my mom seconded Richard Nixon's nomination in 1960. She had been the first African-American woman to graduate from the University of Chicago Law School in 1946. And so she got to be very close to Richard Nixon, who, I got articles, I think, where he talked about, I'm going to be looking out for her. And and then in George Bush's administration, she was the United States coordinator for refugee affairs.
Wow.
So that was something. She was ambassador at large, and she really loved that position.
Sounds like an absolutely amazing woman.
Yeah, I was very fortunate. Two dynamic parents that were very, very different.
Well, let's give it up both for John and John's mom as well. I'm sorry you didn't get to talk more about her. I think we've run out of time, but we could talk to this guy for another 2 or 3 hours, so we're going to have him back again very soon, Barbara.
Definitely. What a wonderful conversation. Thank you, John, for coming here, and Vonnie, what a great interview. So we all enjoyed, I hope, being together today. We do have some more prominent speakers, and just going to run through those real quick. Tony James, former vice chair of Blackstone, current chair of Jefferson River Capital, and chair of Costco, will join us virtually May the 24th. Arvind Krishna, also on our board, chair and CEO of IBM, will be joining us June 7th in person. Brian Cornell, the CEO of Target, will be joining us in person on June the 21st. And on June the 27th, we will have our Peter G. Peterson Leadership Excellence Award, where we'll be giving out, and that'll be a dinner here in Manhattan, where we'll be recognizing actually 2 individuals. I want to take a quick moment to thank those of our 346 members of the Centennial Society for joining us today, as their contributions are the backbone of the Economic Club and help enable us to offer our programming. And finally, as a reminder, we would appreciate if members take the opportunity to fill out the survey that will come electronically after our event, so we can get your feedback and keep improving our value proposition. So thank you all, whether you're in the room or with us digitally today. And please enjoy your lunch if you're in the room. And for everyone, we hope to see you soon. Thank you.
Thank you.